And there you have it, your closing bell there for April 26th. And as we noted there, red across the board. The sell-off that started in the intraday continued its descent. The Dow falling more than 800 points, down to almost 2.4% there. The S&P 500 also down 120 points there, down 2.8%. And look at the NASDAQ, down almost 4% there, losing 514 points. Well, let's break some of this down with Brad and Dave, and let's also bring in our market panel. Let's welcome Kathy Entwistle, Morgan Stanley's Managing Director, and Shawn Cruz, TD Ameritrade's Senior Market Strategist. Kathy, I want to start with you. What do you attribute this market sell-off that we're seeing today to?
I think it's a lot to do with the Fed looking to continuously increase interest rates, and that's putting pressure on the market overall, particularly the areas that we're talking about, more of the growth type companies. Although we've also noticed that the areas that we like in this type of market, the defensive, areas are also quite pricey at this point. I think everybody's run for cover and there's nowhere left to hide.
Shawn, we're in that quiet period for the Fed. Nothing really changed between yesterday's close and today. So what happened?
Yeah, I think what I've been focusing on a lot is really what's going on with China exacerbating an already very complex issue for inputs for a lot of these companies. And we've been focusing a lot on just the cost, which implies they're still getting it. They're just having to pay a little bit more. But with China going into lockdowns and some of those manufacturing bases being so deep for a lot of these tech companies, think of Apple, is certainly one to keep an eye on, because we're going to get a fresh view from management on how these China lockdowns are affecting their ability to source the products that they need. But I think it's one thing to just have to pay up more. It's another thing if you can't get it to begin with, that can really become problematic for a lot of these companies. And it looks like the case counts and the lockdowns we're seeing out of China are actually spreading and getting a little bit worse, not topping out or being limited to one or two cities. So I think that is really what lit the fire in this market. And then breaking below those Monday lows, I think, is where you saw more sellers coming in.
Kathy, tough to call a bottom, but if we were to even opine on if this is the time to get into the markets, given the drops that we've seen today and quite precipitously going into the close, is that point to set a position on some of the names that are deeply discounted right now?
Well, there are some names deeply discounted, but I do think there's a little bit more to go in the discounts. So I would be cautious about entering the markets at this point. I think there's a little bit more to go. It's impossible to call the bottom. And so we do like to do a little bit of dollar cost averaging on the way in as well. But I would be very cautious about that. And I would also mention, yes, supply chain has been an issue. We've got issues over in China. We've got inflation. These are all things that, we've known about and it's, been recurring. But I think it's all coming to a head right now. And everybody's at this point where it's like there's nowhere else to go. We know that the action is finally going to happen. And that's going to affect the markets. And really with earnings coming out, this week particularly, we are going to see a lot of companies that might not be able to be keeping up with the pace in the future. And that's really what we're looking at. What's going to happen in the future and how is all of these different variables going to affect the companies, including supply chain, including inflation, including, increased credit costs. There's a lot going on right now.
And Shawn, obviously in the thick of the season where we're seeing a lot of these tech earnings continuing to come out, if you're a retail investor wondering, is now the time when I jump in and buy the dip? How would you advise your clients to really react in this sort of environment?
We've already seen our clients taking steps where they're, I would say, just moving a little bit more to the core. Even when they're going into these high growth tech names, they're not really going out there into some of the frothier areas, the more speculative type of companies that maybe don't have those big corporate customers locked in yet. They're still not cash flow positive or having positive earnings. And they're going back into some of those more core names, which still are, in fairness, aren't doing well right now, but they're really focusing on profitability, stable cash flows, stable margins is also something that's key. And they're taking small bites right now. So they're not flooding in these markets on every little pullback, but they are using these pullbacks as an opportunity to take small bites and accumulate small positions, similar to what we just heard, that there's this dollar cost averaging going on, because I think everyone understands this is a volatile market, and trying to pick the exact bottom is something that can be very difficult when so many variables are in flux right now.
Kathy, the NASDAQ now down 20% year to date. What do you expect from the Fed May 4th? And could all of this change its calculus?
Yeah, we were thinking about 50 basis points, but it can. They are getting squeezed right now. So it'll be interesting to see if they actually make any, significant increases in the rates, or if they peel back what we were thinking. I do think, the growth at a reasonable price companies are the areas that will benefit, I think, the most in the next, 3 to 6 months, with the different things going on in the Fed and the rates rising, and we just have to be thoughtful about it. So it's just a wait and see, but I would still think that the 50 basis points is on the table.
Shawn, what would you look towards in this earnings season to really decipher whether or not the consumer is as strong as we have heard that they are right now?
So one thing that I think is played out to some extent from what we've already seen, and I think it's going to be worth paying attention to, is if there is a little bit more of a focus on just revenue and earnings, or if there's this look through at volumes. Because some of the companies that have come out and they've reported seemingly decent revenue numbers, and in some cases even decent earnings numbers, they're also reporting volume metrics alongside those, which more often than not, when there's really nothing divergent there, get overlooked. But we've heard this from now a few companies closely tied to consumers, who have said, yeah, revenue is up to some extent because we're able to pass through some of these costs. I guess you say they're not able to, but they're passing through some of those costs, but that's impacting volumes. And you've seen companies that have come out and reported that get hit. So I think there is going to be some focus on just general unit demand for whatever your product or service is, to see if you are hitting sort of that limit of your ability to pass through cost without impacting demand for your product, especially if what we've heard so far from a lot of these management teams is that they expect this to persist well through the end of the year, not be something that's going to resolve itself very quickly here in the next month or so.
And Kathy, as we do look forward, you're saying patience is key as you look ahead to adjust for the headwinds over the next 3 to 6 months, and you don't expect a recession next year. How should people be identifying this period, really trying to keep an eye on the signals versus some of the noise we're still seeing in the markets right now?
Absolutely. That's a great question. We're telling our clients, I'm telling my clients to be patient. We have them positioned well in their portfolios, allocated properly. We've got the growth at a reasonable price. We've got areas in the market that we think will do well going forward. And you just have to, as an individual investor, you just have to sit tight. It's a really difficult time, especially when you see days like Friday, days like today, and you're not really sure what's going to happen in the short term. You just have to look at the long term and know that we will have a recovery. And we do think that we'll have an opportunity for another bull market in another six plus months. So we're looking to add to their exposure over the next 3 to 6 months.
Okay, Kathy Entwistle and Shawn Cruz, appreciate you both. Thank you.